Well, economic slowdown is picking pace globally with countries fearing recession all around. Let's listen in to CNBC-TV18's Lata Venkatesh, who caught up with Raghuram Rajan, the former governor of the RBI, to get his outlook on this issue.
There is more leverage than there was in 2008, but it's not in the same places. Banks are less levered than they were then. On the other hand, some corporate sectors, certainly in the United States, are more levered. Certainly in China is more levered. And of course, governments are more levered. So leverage was the big factor in 2008. It's different today, not necessarily better, but different. Second, I think the big issue today is not so much the financial sector frenzy, there is some, but really on trade and global investment. And the worries are that if we don't pay enough attention, the old global order is going out of the window and there's nothing really to replace it to keep countries from doing things that serve their own interests rather than the global interest. So it's a different world. Do I predict a big crash coming? I don't know. But I do think that it's going to come from different sources, and simply fixing the old problems is not going to prevent the new ones.
Okay, now just a couple of more questions on India. You know, estimates of India's growth this year is being brought down rapidly. Many are expecting it now closer to 6 to 6.5%.
So let me
what
start
are your
again.
thoughts?
There are a variety of growth projections from the private sector analysts, many of which are below, perhaps significantly below government projections. And I think that certainly the slowdown in the economy is something that's very worrisome. You can hear business all around worrying and complaining out loud that they need some kind of stimulus. But I also think that we should pay attention to some of the arguments made by the former chief economist, Arvind Subramanian, that in fact we may be overestimating growth with some of the new GDP data. And I would suggest that we, and I've been saying this for some time, we need a fresh look from an independent group of experts at the way we compute GDP and make sure that we are not, in a sense, having GDP numbers that mislead and cause the wrong kinds of policy actions.
See, that's about the number. But what about the nature of the slowdown? Is India in a structural rut? Do we need something like a redux of 1991 reforms?
I have been saying for some time that I really do think we need a fresh set of reforms. And we need a fresh set of reforms informed by a view on what we want India to be. And I would love for that view to be articulated at the very top. Here is the kind of economy that we want. You know, one-off programs here and there don't amount to a comprehensive reform agenda for the economy. What we call reform, borrowing in international markets, is not really a reform, it's a tactical action. What we really need is an understanding of how we are going to propel this country by the 2 or 3 percentage points greater growth that it needs. And that needs fixing the immediate problems, such as in the power sector, such as in the non-bank financial sector. And those need to be done yesterday, not in the next 6 months. It's very important that those be tackled immediately. But we also need a new set of reforms which energize the private sector to invest. SOPs, stimulus of one kind or the other, are not going to be that useful in the longer term, especially given the very tight fiscal situation that we have. Instead, bold reforms, well thought out, not jumping off the cliff, but really seriously thought out reforms in a variety of areas which energize the Indian people, energize the Indian markets, and energize Indian business. This is what we need today. And I really hope we put our best minds to think about this, because absent that, my sense is we're in for not so good times.
Okay, the June telecom data is out, and Bharti Airtel has lost a few users, but much lower than what it lost in the prior months. We've lost about 30,000 users in the month of June. We'll await the figure by Vodafone Idea because, compared to Bharti, Vodafone Idea has been losing a lot more by way of subscribers. I think in the prior month it was in a significant number of lakh users that Vodafone Idea had lost. So that number needs to be watched. Reliance Jio continues with adding about 8 to 9 million users or 82.7 lakh users in this month. So that has been the run rate that they have been maintaining. About 8 to 9 million users is what they've been adding on a month-on-month basis, led by their Jio phones seeing a fair amount of uptake. So Reliance Jio continues with its run rate. Bharti has managed to at least arrest the fall in its subscribers, so pretty much maintaining what they had in the prior month. 30,000 on their base of a little less than 300 million subscribers is not significant. There you have it. Vodafone Idea is the one which has seen a big cut. 41 lakh users lost in the month of June, and this is after losing more than 50 lakh subscribers in the prior month. And I don't have the trend chart with me, but we will put that up for you in some time, and you can see Vodafone Idea has been consistently losing quite a few subscribers in the last few months. This is data as has been released by the TRAI for the month of June. Let's move on and talk about the new listing, the new kid on the block. Microfinance lender Spandana Purti Financial started off trade with a 3.5% discount to its issue price, but now it's extended its loss to close to about 10%. CNBC-TV18 spoke to Padmaja Gangi Reddy, the MD, to understand how the company will be using the IPO proceeds and to understand the financial model and the operating structure of the company. Listen in.
We raised 1200 crore in IPO. Out of that, 400 crore was primary and 800 crore was secondary. So the plan in terms of how we are going to use the primary is we want to further increase the capital. Before IPO, the capital adequacy was at 40%. So post this 400 crore infusion, the capital adequacy is going to further increase to 46%. So in microfinance, the advantage that you have with the higher capital is, so with more and more capital, you'll be able to do more and more off-balance sheet deals. So the capital you can use in terms of deploying portfolio. So the free portfolio, which is not hypothecated to any lender, the portfolio which is created out of your own capital can be securitized to banks. Banks will be more than happy in terms of securitizing the portfolio, in terms of you can assign that portfolio to different banks. So that is a free portfolio that is available. So banks have 40% priority sector lending targets, and banks also need agri portfolio. So this portfolio will be available for us that we can securitize and we can also assign to different banks.
Ma'am, to come to the AUM as far as the company has, where does the AUM stand at this point of time? What is the growth which you've seen in your AUM in the last 2 financial years, and what is the likely trend in terms of AUM growth itself which you see for the next 2 to 3 financial years?
The AUM has grown quite well in the last 2 years. FY17, that was the time we exited from corporate debt restructuring. So we got into CDR after AP crisis in 2011. Subsequently, in March 2017, we exited from CDR. When we exited from CDR, it was just 1100 crore, and we were the 8th largest microfinance organization then. And FY18, the portfolio grew from 1100 crore to 3100 crore. It was 144% growth, and subsequently from 3,100 crore the portfolio grew to 4,400 crore by FY19, and by June 2019 the portfolio grew to 5,200 crore. Okay. In the last 2 years 3 months, the portfolio grew from 1,300 crore to 5,200 crore. In terms of growth, like it was 4 times. Okay. The portfolio grew by 4 times in the last 2 years 3 months.
Okay, the last 2 years 3 months, 4 times growth as far as the portfolio itself is concerned. Going forward in the next 2 to 3 financial years, what kind of growth do you see yourself making as far as the AUM is concerned?
I think we should be able to continue to grow in the same scale. So as I said, like FY19, of course FY19 it was FY18 it was 144% growth. We will not be able to continue at that rate. So that was basically while we were in CDR, we were not able to access funding. So we had borrowers, we were not able to give them loans. Okay. But soon after exit, like we were able to give them loans. As such, the portfolio grew by 144%. But again, FY19 2019 it got moderated. I think going forward, like, we will be able to continue to grow at the same scale.
Okay, all right. Let's keep an eye out on the Indian rupee, actually. That one has weakened a tad bit. I think it was moving towards the low point of the day. Maybe we should get the intraday chart up for you. Yeah, from the day's high, it's moved closer to the day's low. And I think the IT stocks as well should come up for you, because in the last 10 minutes or so, a lot of those IT stocks are gaining. So maybe the IT index should come up for you. Yeah, that's up close to 100%. Wipro has moved higher. TCS has moved higher. And even Infosys has taken a bit of a leg up. I think we should pull up the intraday chart of all these three stocks. They're moving higher gradually in the last 10 to around 15 minutes.
Average rate for most companies, so when they calculate, they look at the average rate, not the end rate.
Yeah.
And that was somewhere about 69.770 in the prior quarter. So this quarter, it's at least for the last few weeks, it's consistently been above that 70.5, 71 mark, which means that the companies will have some financial gains this time around, at least in terms of margin improvement.
And that could be the reason why, in fact, the Nifty as well has moved to the high point of the day, because some of these IT stocks are trading more or less flattish. Now you have the IT index as well, that's up close to 100%. The Nifty Bank as well is up 0.8%. So both the pillars of the Nifty doing well, and the Nifty is at the high point of the day. Slip in a short break, you come back. We'll continue our focus on markets as well as